Have you ever been scrolling through your feed and you see all these people talking about making money in the stock market and you think to yourself, man, I wish I could do that, but I just don't have thousands of dollars lying around. Well, what if I told you that you can start your entire investing journey with just $100 a month? In this explainer, we're going to break down exactly how to do it. So let's just get this out of the way right now. Let's debunk the biggest myth in personal finance, the idea that you need to be rich to start investing. It's just not true. Honestly, it's a story designed to keep you on the sidelines, feeling like it's some exclusive club you can't get into. Today, we're going to shatter that illusion. We're going to show you how to build your own financial future one small, smart investment at a time.
$100. I want you to look at that number. It's not just $100. It's a declaration. It's a commitment to your future. Now let's be real for a second. Is $100 a month going to make you a millionaire overnight? No, of course not. In the beginning, you might not even beat inflation. But what it will do is so much more important. It will forge the habit of buying assets. And that habit, that is the absolute cornerstone of building wealth. It gets you in the game.
So, how are we going to do this? Here's our roadmap for today. First, we got to talk about mindset. Shifting how you even think about money is half the battle. Then, I'm going to give you a really powerful 4-part framework you can use to look at any investment. After that, we'll see how to actually put that framework to work. And finally, the fun part. We'll talk about making your very first investment.
Okay, before we even dream about where to put our money, we have to do some work up here in our heads. This is seriously the most important step. See, most of us are taught to trade our time for money, right? Go to school, get a good job, get that paycheck. But investors know a secret. They know how to make their money work for them. And that's the huge shift we're about to make.
And you know, this quote from Robert Kiyosaki, the author of Rich Dad, Poor Dad, it just hits the nail on the head. Our schools are fantastic at teaching us how to be amazing employees, but they often completely miss the boat on teaching us how to be smart investors. The goal isn't just to earn a paycheck. The real goal is to build systems that generate income for you 24/7, even when you're sleeping. This right here, this might be the most important rule in all of finance, and it's so simple. An asset puts money in your pocket. Think of it like a little money machine that keeps paying you. A liability, well, it takes money out of your pocket. That's your car payment, your credit card debt, things that are constantly demanding your money. Your mission, should you choose to accept it, is to use that $100 a month to start building a little army of assets. So, once you have those assets, there are 2 main ways they can pay you. A capital gain is that classic buy low, sell high thing. It's a one-time pop of cash, which is great, but then it's over. Cash flow, on the other hand, that's a long-term relationship. It's a steady, reliable stream of income that shows up every single month. And for our purposes, building that reliable cash flow is going to be our main focus. All right, let's get into the heart of it. This is your investor's toolkit. This is what separates the pros from the amateurs who are just guessing. I call it the 4 pillars of investing, and it's a system you can use for anything: stocks, real estate, crypto, you name it. This is your foundation for making smart, confident decisions.
So these are the 4 big questions you have to ask before you invest a single penny. First, is the actual thing I'm buying, the company or the property, is it strong? Second, what's the market doing right now? Is it a good time to buy? Third, how can I make this thing pay me consistently? And last, but certainly not least, how do I protect my money if I'm wrong? When you can answer these 4 questions, you're not gambling anymore. You're investing with a real plan.
Let's dig into that first pillar, fundamental analysis. This is where you put on your detective hat. You're investigating the health of a company. You're looking at its financials, checking if it's making more money this year than last year. You're looking at its debt. You're asking, who's running the show? Do they have an edge over their competition? Basically, you're trying to figure out if you're buying a racehorse or a donkey. And when you talk about fundamentals, you have to talk about the master, Warren Buffett. He has this simple but incredibly powerful checklist. He only invests in companies that have amazing leadership, a solid future, a business he can actually understand, and, this is the big one, are on sale. They're trading for less than what they're really worth. If a company doesn't check all 4 of those boxes, he just moves on. No exceptions.
Okay, on to pillar 2, technical analysis. Now, if fundamental analysis is like checking the engine of a car, technical analysis is like looking at a live traffic map. We're not focused on the company anymore. Now we're just looking at the stock chart itself to understand what the crowd is thinking. Are people excited and buying, pushing a price up, Or are they scared and selling?
Here's a kind of funny way to think about it. Think about Jerry Seinfeld's dating life on the show. You know the pattern, right? He meets a girl, everything seems perfect, and then he finds some tiny, ridiculous flaw, and it's over. Well, the stock market's a lot like that. It's driven by human emotions, fear and greed, which create these patterns that just repeat over and over again. Technical analysis is just the skill of spotting those patterns.
And now, pillar 3. This is where the real magic happens. This is where we learn how to get our assets to pay us every single month. See, we don't really care if the market is going up, down, or just sitting there. There are specific strategies you can use, like collecting dividends or selling options, to create income no matter what. And that is a powerful, powerful thing.
Because this is the finish line. The ultimate goal is to build up that asset column, piece by piece, until the passive income it generates is more than your monthly expenses. That, my friends, is the definition of financial independence. It's not some crazy, far-off fantasy. It's a real, tangible goal you can start chipping away at today with just $100.
And now, for the pillar that will keep you in this game for the long run, risk management. Look, we can't control the market, we can't control the economy, but we can 100% control how much we are willing to lose on any single idea. This is your financial seatbelt. It is non-negotiable. This is what makes you a professional, not a gambler.
So how do the pros do it? It's a simple 3-step process. First, you decide on your absolute max risk per trade. Most pros stick to 1 or 2% of their total account. So if you have a $10,000 account, you never risk more than, say, $200 on a single trade, ever. Second, you use that number to figure out how many shares to buy. And third, and this is so important, you know exactly where you're getting out if the trade goes against you before you even get in. That's how you play defense.
Okay, enough theory. Let's get our hands dirty. How does this framework actually look in the real world? Let's take our 4 pillars and apply them to a real-world scenario so you can see exactly how this works, especially when you're starting small.
Now, check this out. This slide shows the incredible power of leverage using a tool called options. So let's say a stock is trading at $50. You could buy 100 shares, but that would cost you $5,000. Or you could buy an options contract. This gives you the right to buy those 100 shares at $50, but you don't have to. And that contract might only cost you $300. Your risk is capped at that $300, but your potential reward is huge. Now, I have to be really clear. Options are complex and very risky. You absolutely must educate yourself before even thinking about trading them.
Woo! We have covered a ton of ground, from mindset to frameworks to some pretty advanced stuff. But now, let's bring it all back home. Let's talk about the single most important step, taking action with that first $100.
Guess what? Your investing journey doesn't start with real money. It starts with practice. Almost every online broker has something called a paper trading account, where you can play with fake money. I want you to open one. Then pick a company you actually know and use, like Starbucks or Apple. And then walk through our 4 pillars. Do the research. And finally, make your first practice trade. Get a feel for the process. Build your confidence before you risk a single real dollar.
And I really want you to let this sink in. The goal of your first investment isn't to get rich. It's to make $1. Just one. Because the moment you see that first dollar hit your account from something other than your job, something clicks in your brain. You realize, wow, I can actually do this. That psychological win is worth more than any amount of money. That's the moment you truly become an investor.
So that's how it starts. It doesn't start with a huge inheritance or a lucky stock tip. It starts with knowledge, a solid plan, and the courage to take that first small step. It all begins with a single dollar. So the only question left is, what's your first move going to be? Thanks for joining this explainer.